The reason you clicked on this video is that you're probably trying to grow your small trading account into a number that you're going to be comfortable with. Worry not. On today's video, I am going to be showing you some of the exact method and strategies that I used in order to be able to grow my small accounts. And as well, I started off making small numbers of profits all the way up to numbers whereby I was comfortable and confident into my trading account. So today's video will be broken down into 5 simple steps. The first would be you being able to choose the right account and as well the leverage for your account. The second would be you being able to understand and at the same time master risk management. The third step would be me breaking down some of the strategies that you can use in order to be able to grow that exact same account. The fourth step is being able to manage emotions and at the same time your mindset, because we all know psychology plays a part. And the fifth step would be you being able to just scale up your profits. So if you're just new on my YouTube channel, I go by the name of Lisiwa Mutupi, and I thank you for clicking onto this video. I will make sure that you get the value of you dedicating your time into watching what I've got to share in terms of you being able to grow your trading account. One of the things that you can do for me is to obviously just subscribe to my YouTube channel and at the same time comment what numbers are you trying to achieve, what account are you on right now, and at the same time what numbers are you trying to achieve. And then maybe even on the next possible videos that I'm gonna make, I am gonna just pick out one of the best comments and I'm gonna be making and growing my account in terms of showing you the actual thing. So why am I the right person to listen to in terms of this exact same topic? I've started trading since the last 8 years I have been trading. And one thing that I started with is the very first account that I deposited in the markets was literally $33. And then I traded with amounts like $1. I traded with amounts like $5. I traded with $200, $100, all the way up with $1,000, all the way up to $10,000, $100,000 in terms of the amounts that I've traded with. And I've grew these accounts. I'll show some screenshots right here so that you can see me making small profits way back in my early ages, all the way up to me being able to just trade profitably right now. So now I want us to dive a bit more deeper into the very first step, which is step 1, choosing the right account and at the same time the right leverage. So in terms of growing a small account, the most important thing that you want to look into is, at first, when it comes to trading, you need to be able to trade with funds that you are willing to lose. Because I don't want someone to get into this with the mindset of, you know what, this is my last 50 rands or $50 and I'm trying to grow it to all these big numbers that I can potentially just grow it to. So you need to just fund with the amount of money that you're willing to lose, because this way you are going to be able to put emotions aside, detach some emotions, but you'll be able to just focus on the right things that you need to do, which is the steps that I'll be breaking down with you in terms of what you need to do. So now when it comes to account types and account sizes, obviously looking at numbers like $10 all the way up to maybe $50, similar numbers like that, but there's a lot of ways where a small account can mean a lot for different types of people, which means that when it comes to opening up an account, you need to be able to open up an account with a broker that will allow you to be able to fully capitalize on growing a small account. And what you look for in terms of opening that account is tight spreads. That's the very first thing. Leverage that's going to allow you to be able to execute trades. And most importantly, the account type, meaning that when you've got an account type, you might be looking into opening, instead of a standard account, you can trade on a micro account. And then secondly, in terms of spread and stuff, the one broker that I know that offers a tight spread, that offers the right account type, which is a micro account, and as well that offers the right leverage, is IQ Markets. So one thing that I'll do is that I will leave the link in the description, which is the second link. You'll be able to just register an account with them. And the best thing that I love is that you'd be able to fund with the minimum. Literally, you can start with as low as 50 rands, and then from there you can scale and grow up your account. So that is the very first step. Diving onto the second step, which now we're going to be speaking about mastering risk management. The first thing that you need to understand about mastering risk management is the importance of a stop loss and as well risk to reward. So one thing that I've noticed people do is when placing trades, they fail to put stop losses because they feel like a stop loss is a way to limit them in terms of, like, let's say it hits their stop and then they're able to lose money, but they don't understand that this is the best way that you can preserve and protect your capital, because without a stop loss, automatically you can lose all your funds in your trading account. But with the stop loss, you only lose a specific amount of capital that you would have put your stop at. But when it comes to risk to reward, you only get to look for trades that offer you a risk to reward of 1:3 or more, which means that for every one that you lose, for every dollar that you lose, you are able to gain 3 or more. This is the best ways that you can go about it, because what it does is that you cap or you limit the amount of losses that you can take in terms of the amount of loss you can experience in the markets. But when it comes to the profits, you open open up room so that you are at least able to settle for 3% in terms of, let's say if you're risking 1%, but the profit potential is more exponential, which means that when it does get to your TP, instead of taking profit, you can still grow it, which now brings me into another point, which comes to trail stopping. So what I've done is that how I went about growing some of my small accounts was, when I do happen to hit take profit, I don't close the trade at profit, but instead I move my stop loss from where it initially was, and then I trail stop. So trail stopping is basically being able to take your stop loss and put it into profits. So even if the market goes against you, it's not gonna take you out with a loss. It's only gonna take you out with some profits. Let's say if you're floating at $10 and you put your stop loss at $8, if the market goes against you, it's only gonna take you out at $8 profit. So this way you lock in maximum profits, which means that in terms of losses, you make sure that you don't lose more than you're comfortable with, which means you put stop losses, and then you look for trades that are going to give you a great risk to reward. And then once those trades are in profit, you only trail stop. You move your stop losses in profits. The more you lock in, the more you move in profits, the more you'll be able to just capitalize fully from the markets. Moving over to step 3, this is going to be a bit more interesting. But before we just do that, if you're finding value from this video, I'd love if you highly just like this video, and at the same time subscribe to my YouTube channel, comment below so far what it is that you picked up from it, and then let us dive more deeper. So when it comes now to step 3, we're speaking about the best trading strategy that you can use in terms of growing a small account. And the first thing is being able to have a high probability setup, or being able to have a strategy that gives you high probability setup. And when it comes to this, I actually made a video. I'll also make sure that I leave it in the description just here on YouTube. You'll be able to see some top 3 strategies that were able to help me massively in the markets. Very simplified, very easy, but I also have more strategies on my YouTube channel. But the most important thing is being able to have a high winning strategy, because with that, it means that you'll be able to only wait for high probability setup, so that you don't just enter the markets when you feel like it, or you don't just take trades just out of nowhere, but you place trades at the most guaranteed spots that are more likely to give you success. In the markets, it doesn't mean every trade that you place is going to give you profits, but there's spots whereby you can enter that are more likely to give you profits. So it's very wise to be able to use confluences just like market structure, support, resistance, whether it's order blocks, whether it's Fibonacci, and as well some chart patterns, in order of you to be able to just formulate and understand where exactly you enter. Mixing it up as well with top-down analysis, just so you're able to see from a bigger time frame what the price is doing. Then you go all the way down to a smaller time frame so you execute. So with this, when you are seeing on a daily that you are going to an upward trend, and you go to as low as the 5 minute, and you wait for price to get to a level whereby it's going to give you a buy entry, you can go as long as holding the trade for the next few weeks, just because of you are on the right side of the market. So that is one of the best ways that you can go about entering that small lot sizes, whether it's 0.01, but you'll see 0.01 lot sizes giving you a lot of profits. That will just be because of you caught it at the rightest area, but at the same time you managed to have held it and went with direction. And one of the most important things that you can do is you need to be able to just spot at some of the liquid pairs. So I'd look at pairs like GBP USD and maybe as well gold. Those are one of the liquid pairs, which means that they move a bit more, deeper in terms of like in the markets compared to others. Others might be moved a bit more slow. So find out that you're holding a trade for very long weeks or very long days, but it's not paying off much. With these pairs, they're liquid in terms of they can move in their direction. As long as you're on the right side of the market, it will move with you. So it's important to be able to be involved in liquid pairs. So now we're done with step 3, moving over to step 4, which is managing emotions and your mindset. Guys, this part is very important. All the previous steps don't matter if you don't get this right, because when it comes to trading, over 70-80% of it has to do with your mindset. So with managing emotions and your mindset, the first thing is you need to avoid things like over trading and as well revenge trading. And the best way obviously you avoid over trading is by only placing trades on high probability setup. Don't just place trades because you feel like it. Don't just place trades because you see like it's gonna maybe just go up. It's not a setup, you just think it's gonna do that. But place trades on high probability setup that actually have a checklist before you can enter in the market. And then as well, in terms of being able to avoid the revenge trade, one of the best ways that I was able to come up with a system is, at first I used to have 3 re-entry methods, which means that if trade takes my stop loss once, I'll try to re-enter maybe 3 times. But what I've done is that I scaled that all the way down to 2, which means that if trade hits my stop loss once, and I'm only allowed to re-enter the trade once more, which means that if it does hit my stop loss once again, I'm going to call it done on that specific instrument. But if it does move into profits, that's when I'll be able to just use those methods that I said, which is trail stopping and managing my trades well. So one of the best things that you can do is to avoid revenge trading and also over trading. This way you'd be able to just know exactly the high probability setups that you take within the markets, and at the same time you'd be able to know your re-entry methods, and most importantly you only enter when you are confident with your trade. You've ticked down all the spots. And the best ways that you can actually go through following through with that is having a specific trading plan. Once you're able to have a trading plan, it will help you be able to be more in alignment with the best ways that you can follow through with your trades. Because once you're able to follow through with everything that you've said that you're going to do, the only thing that you need now is discipline and consistency towards your trading activities. And how you can go about managing your emotions and your mindset is keeping a trading journal, or something that will allow you to be able to just journal each and every single day, just before the session, exactly after session, just so you'd be able to just know what exactly you've done right and what you've done wrong, so you know where to tweak, where to optimize, what to do better on the next trading sessions. This way even your confidence is going to go up, just because of the fact that you are happy when you trade and you understand exactly what it is that you are doing. So that is now the fourth step. What we're going to do is that we are going to be moving over to the fifth step, which is the last step. And with this, I need you guys to pay extra attention, because this is where you are going to be finding your edge. So just before we dive a bit more deeper into the fifth step, one thing that I need you guys to do is, if you're happening to find value from this video, obviously just like and as well subscribe to my YouTube channel. But one thing that I've done is that we do have a Telegram channel that you'd be able to just be in. It's a free channel. What it will help you with is, whenever I actually upload certain analysis that I see, or whenever we just have some educational tips and free resources, we put them in there, and normally we do that on a day-to-day basis. So if you're looking into having a community of traders that are on the same journey with you, just make sure that you hit the very first link in the description. It will take you to our Telegram channel. But now let us move over to the fifth step, which is scaling up your profits. So the best way to scale up your profits is you need to keep on reinvesting back at least 50% of your winnings. So let's say, for instance, you're able to pull through a few dollars here and there, a few dollars here and there. When you're looking at your weekly or you're looking at your monthly, you are able to see that you've been able to be profitable in a specific period of time in terms of the profits that you made. The best thing that you can do is to reinvest that money back in the market. So how you go about reinvesting that is, I used to have a rule whereby each and every single week, as soon as it was Friday, what I would do is that I would literally just close off and then see the profits that I made, and then I would withdraw at least over 70% of the profits that we made and then put them aside. This way, it allowed me to be able to have the regular withdrawals from the markets, but at the same time, it also allowed me to be able to grow my account, because the rest of the 30% of the profits that I didn't withdraw, it means that my account grew. But this just gave me a whole feeling of growing and compounding my account, at the same time growing and compounding my bank account. And then the best ways that you can go about basically just getting more deeper is being able to invest into a prop firm, because once you're able to take those profits and then you invest them in a prop firm, that is one of the breakthroughs that you are going to get. Because if maybe you made $500 from the market and then you go and buy a $100,000 account, automatically once you even get that one first initial payout, that's going to be $5,000, whatever the case is, that puts you ahead. It gives you access to capital that you don't even have to search more deeper into your pockets. And that is one of the best ways that you can go about scaling. And also what I'll do normally at times is that it's not just about the trading account, it's not just about the strategy or the discipline or whatever the case is, it's also more on the education, me being able to have the right knowledge. So also one thing that I can highly suggest is, once you're able to go through a specific period of time where you've noticed that you've made some winnings, you made some profits, and then maybe you've got some money that's going to be able to help you get a prop firm account, what you can as well do is put money aside to be able to invest in a thing such as, like, maybe whether it's a mentorship program, whether it's a course, but something that's going to help you be able to just get to the next level. Because now, whereby when you started, you were here, and now maybe you are here a few steps ahead. But for you to be able to go more deeper, for you to be able to experience more steps, you need to become a better person. You need to learn new things. You need to be able to do things differently. Meaning that now you are trading with a bigger account, you need to fix your mindset just so you're able to be at the right step. So that is why you need to also be able to just invest some of those profits into a way whereby you'll be able to just get a bit more ahead. And the best ways that you can go about it is you can check out one of the links that is in the description. We've got some beginner and as well advanced packages. You can just check which one is best for you, and that is one of the best ways that you can go about scaling yourself, your mindset, your education, and not just your trading account. But that is the top 5 steps that we're able to break down in how you can go about growing a very small account into a number that you're comfortable with, just so you can get to that level where you are profitable enough to be able to at least even live off of profits that you're making from the markets. If you happen to have found value from this video, make sure that you do like, as well. Make sure that you have subscribed to my YouTube channel, but at the same time comment below what is that one thing that has caught your attention that you can just comment and let me know, just so I'm able to also know to other people that, guys, one of my brothers, my sisters were able to spot this, and this is how they were actually able to experience a young breakthrough. Mention to me also what account sizes are you guys looking into starting from, and then what account sizes are you actually trying to achieve. If you're looking to start with $5 to $50 or $5, but you have to also have realistic approaches. So I want to see all that in the comment section. It is your boy Somutupi. I thank you so much for watching this video. I'll see you in the next YouTube video.